Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, and for those of you who do not know, my name is Ali and I have over 20 years experience teaching accounting, economics, business and law. And through this channel I'd like to provide some stock analysis and also a short 5-minute trading lesson at the end, so please stay tuned. Okay, in the previous video we did a stock analysis of NIO and also an update on their delivery, so please refer back to that video where we also did a price target and an entry point for ticker symbol NIO. Okay, in today's video I'm going to share with you my top 3 stocks to put on your watch list from Monday, and the first stock I'd like to share with you is ticker symbol CCIV, Churchill Capital. And in terms of the close of play on Friday, this stock closed just in excess of 4% down at a price of $21.14. So why have we added this to our watch list? So let's have a look at some of the reasons. Okay, so first thing I'd like to bring to your attention is a article from PR Newswire dated May the 1st, 2021, and the headline here is announcement of a fraud class action lawsuit filed against Churchill Capital, ticker symbol CCIV 4. And if we look at the first paragraph here, we can see that the lawsuit has been filed against CCIV on behalf of the people who purchased shares between January the 11th and February the 22nd. So on the face of it, this does seem like bad news for the stock. I can understand the reasons why this lawsuit is taking place. There are a lot of people felt they were misled in terms of the valuation for CCIV. Please refer back to my previous video where I covered this in detail. However, as investors right now, sometimes this particular bad news can also be a good opportunity to invest at a discount price. So we did see the price fall in excess of 4%, and this is obviously reflected into this lawsuit. So what are the other reasons why I think it's now a good opportunity to invest in CCIV, especially if you have not already done so? Okay, so first thing I'd like to share with you is a report from Fintel, and in this report what we can see is institutional ownership in CCIV has rocketed in the previous week from 153 to 223 institutional owners. So this is very, very important news. What we can see now in terms of institutional shares, these represent approximately 37.9% of the holding for ticker symbol CCIV. So this is a huge move in terms of institutional ownership. The reason why that's important, a lot of institutional owners have large amounts to invest, so the investments are usually much higher, and also they're not going to invest in a stock without carrying out extremely detailed due diligence and expert analysis. So it's a good sign for us retail investors as well, in terms of they must know something that maybe we do not know. Okay, so the final thing I'd like to share with you is the chart for CCIV from January to May 2021. And if we look at prior to rumours of mergers, the share price was very static, trading around $10. So as soon as the rumours in late January and early February were announced, we saw a very significant increase in the share price, and at one point this achieved the price in excess of $66. And then we can see the significant spike downwards after there was problems in terms of the valuation, heading towards $35, $33, and currently right now trading around $21. So we can see sort of from March, April, May, the price has been fairly static. It did at one point in March reach a price at close to $31. However, since then it has been fairly stable around the $21, $22, $19 mark. So right now we're at $21. So in terms of going forward, this chart seems to be set up very nicely for a significant movement either up or obviously down. In terms of the institutional investors that we've seen, that is an indication for me that there's potentially an increase going up. However, in terms of the overall picture, CCIV is still a company that is yet to generate profit. In terms of projections for the future, they do seem to be very positive, but we've not had any deliveries of that yet, and we are still waiting for confirmation of these significant sales. So that's why it's still a high risk stock. However, for somebody not invested in CCIV now, certainly looks to be a good opportunity right now. So in terms of a strike price, if you can catch this below $20, that will be an excellent entry into ticker symbol CCIV. Okay, so the next stock I'd like you to put on your watch list for Monday is ticker symbol PACB, Pacific Biosciences. This is a stock that I did invest in on close of play of Friday as well. My average price currently is $29.69 and it did close at $29.85. So why have I chosen to reinvest into this stock? Okay, so first thing I'd like to share with you is a headline from the Motley Fool. The title here, dated April 30th, 2021, Why Pacific Biosciences of California stock is down today. So we did see that on close of play on Friday, the stock was down approximately 11%. So although that is not good for existing holders, it does represent a good opportunity for new investors to make a move into this stock. So first of all, let's delve a little bit deeper into this article. Okay, so on Thursday, PACB did announce first quarter 2021 reports, financial reports. These were generally in line with analyst expectations, but as we have seen, the share price did fall. So let's have a look at the details of the report. So the first quarter revenue was $29 million. That was an 86% year-on-year increase. So on the face of it, that is certainly very good and also what analysts expected. However, the company recorded an $87.4 million loss per share of 45 cents compared to the income of $1.3 million and net income share of 0.01 cents in terms of the comparison with a year ago. So analysts tracking the company predicted that the net loss would be 46 cents. So overall, we can see that a lot of the investors were not satisfied with this report, which on the face of it does seem to be quite good. Okay, so final part of the article, we can see that although the financial results were kind of in line with what analysts expected, one of the reasons why the share price did fall could be that in terms of although the results were expected, they were not better than expected. So that's one reason. The other thing is we need to bear in mind in terms of people who have purchased PACB, over the year, the stock has still increased in excess of 742%. So the general momentum is still good. They have lots of experience in the healthcare industry that we have seen. In terms of the overall business, it is still very, very strong. And in terms of growth, that's still certainly going to be happening. So what else can we see about PACB? Okay, so one thing I'd like to remind you is ARK, the investment fund headed by Cathy Wood, has over 50 companies in their ARK G ETF fund, and PACB is actually number 4 on the list in terms of portfolio weight. So that demonstrates how much confidence they have in terms of PACB being the 4th biggest holding in this stock. So overall, we can see the revenues have increased. The overall results are, in terms of financials, are as expected. So what I'd like to now share with you is some further developments. Okay, so the next image I'm going to share with you is looking at the recent company highlights in terms of developments. So the first one is an announcement from SB Management that a subsidiary of SoftBank Corporation is going to make an investment of $900 million into PACB, and that's going to help with their growth initiatives. Second announcement that we have is the company announced a multi-year collaboration with Inviti Corporation to begin development of a production high-scale throughout sequencing platform, leveraging the power of PACB's highly accurate hi-fi sequencing to expand Inviti's whole genome testing capabilities. So very positive news overall in terms of developments. Okay, and finally, I'd like to share with you a graphical analysis of Pacific Biosciences in terms of the momentum overall. So if we look here, in terms of at one point, we can see that the share price was well in excess of $50. However, if we look at the blue primary trend line, we can see the general momentum is now moving upwards. And if we look at the resistance lines at the bottom, which are around about $28, and then the support lines at the moment seem to be around about $36. So it does represent right now a good opportunity to invest in here. So any investment below $30 would be a good entry point. Okay, so the final stock I'd like to bring your attention to in terms of putting on your watch list for Monday is ticker symbol TSLA, Tesla. This is a stock that I did carry out a due diligence video for in significant detail previously, so please refer back to that video. So this is a stock that I chose to make an investment in on Friday. My entry price was just over $686. It closed in excess of 4.8% up on the Friday at $709.92. So what was my reason for investing in Tesla? So first of all, I'm sure you're all aware of the recent bad news affecting the share price of Tesla, which was the accident. This did drive the share price down below at $1.671. However, I believe this was just a short-term impact. In terms of the overall momentum, we can see on the week, although it's 2% down, on the month Tesla is 11% up, and also well in excess of 4% up on the day. So let's now have a look at this news article from the Motley Fool. Okay, so in this article from the Motley Fool dated Friday the April the 30th, the headline here is why Tesla stock jumped on Friday. So we can see that the Tesla did spike up at one point, rising at as much as 5.7%. So we can see in the second paragraph there, shares of the stock are likely to go up in terms of the valuation, and that indicates that the company may be having a better than expected 2021. So let's see the rest of this article. Okay, so the rest of the article is basically focusing on expectations going forward. So the first thing we can look in the first paragraph is Tesla expects sales of its silicon carbide to reach $550 million this year. So that obviously indicates that Tesla is certainly ordering enough silicon carbide to support its production of 1 million vehicles this year. So again, positive news there. We can also see that at the bottom, Tesla has remained a little bit vague in terms of their overall 2021 expectations in terms of vehicle deliveries. However, they have said that total deliveries this year will grow by at least 50% or more. So overall, good news in terms of going forward. And finally, to finish off on the final part of this article, I'd just like to draw your attention to the third paragraph at the bottom, and that is that the company's filing with the US Securities and Exchange Commission, in which Tesla said it was very probable that revenue would jump $55 billion in 2021, and that will represent a big jump compared to the previous annualized run rate of $42 billion. So exceptional growth figures there. And if you remember in my previous video, we did talk about Cathie Wood's valuation, which was extremely high for this stock. So going forward, Tesla as an investment is certainly a long-term hold. Okay, so if anybody is looking to invest into Tesla long-term, you do not need to buy a full share through the Trading 212 app. You can certainly buy partial shares as well. So you can make an investment of $50, $100. Doesn't have to be a full share. So in terms of an entry price, certainly if you put this on your watch list and you can see a price below $700, I believe that is an excellent value going forward. Okay, so due to an extended analysis, the next lesson of the day will be in the next video. However, what I'd like to do is just finish off with a light-hearted image to share with you in terms of holding your shares. So if we have a look at this image here, I'll just go through that with you now. If you ever think, man, it's too hard to hold sometimes, just remember that little Johnny gets picked up from school by his dad every day. So I hope that kind of gives you an indication of how difficult it is to hold your shares sometimes. Thank you very much for watching. Please stay tuned.